The Central Bank of Trinidad and Tobago lowers its fractional reserve banking percentage from 14% down to 10%. The last time this was done was during the COVID pandemic, where they lowered it from 17% to 14%. So what does this mean? And is it a good thing or a bad thing? It means that previously, when you went to the bank and you deposited $100, the bank needed to keep $14 and they could lend out $86. But by lowering this to 10%, the bank needs to keep $10 and they can lend out up to $90. So the bank could basically lend people more money. At the most superficial level, this appears to be a very good thing. And people will say that it's stimulating the economy and this is what is needed for growth. But at a more deeper level, it couldn't be more obvious that they were basically using a plaster to patch a sore. Firstly, if everyone went to the bank and asked for the money that they deposited, the banks will only have 10% of your money. It means that this makes the banking system very unstable and likely to crash if something like this were to occur. Secondly, because the money is available for borrowing doesn't mean that it's free. One could argue that financial literacy in Trinidad and Tobago is simply not the best, and people are not being taught how to spend and how to invest money. As a result, a lot of these people will borrow money and they will invest in liabilities, something that doesn't make an income, putting themselves further in financial debt. If the government really wanted to deal with the economy, they need to start looking at the situation with unemployment and start with job creation. What's even worse is that in the short term, this could lead to something called demand pull inflation, where basically you have more money, but the spending power of it is less. And let's not forget the situation where general elections are up in a couple months, where this falsely gives the impression that the economy is doing a whole lot better when it actually isn't. Just something to keep in mind. The banks only lower the interest rates when they're not making more money, and they want to do something to stimulate the economy when it's not in a good state. Let me know what you guys think in the comments down below.